Stocks at gains with midcaps continuing to lead amid conciliatory comments from Trump and his team. Utilities, realty and energy lead gainers while financials and healthcare lag. Stocks of sugar mills surge after government says it will not impose any restrictions on production of ethanol in the coming season, November to October. Industry experts see this increasing diversion of sugarcane to near 5 million tons from little over 3 million tons. Spot gold escalates to a new high of $3,508 an ounce, even as COMEX gold races up to $3,557 an ounce. Safe haven demand amid uncertainty over tariffs and expectations of a rate cut in the US fuel demand. US Treasury Secretary Scott Bessent tells Fox News that India's values are much closer to the US than to China and Russia, and that America will get the trade rift solved. Well, hello and welcome to Business Lunch live from the CNBC TV18 Motilal Oswal studio. I am Bamakshi Doria and it's only the second day of this week, but the index is up and away in trade today. The bulls continue to march on. The Nifty for now is up almost 115 points. The mid-cap end of the market is also doing extremely well, up almost 0.7%. But what is not actually contributing to the gains is the Nifty Bank index, which is rather flat but is trading in with a slightly positive bias. Largely, the advance decline ratio is in the positive, is in favor of the advances. We have approximately 2,000 stocks advancing for almost 700 stocks that are declining in trade today. Now, as far as sectoral movers are concerned, Nifty Energy Index is the one that is actually leading the gains. We have several power stocks as well as, stocks from the energy space overall that are buzzing around. Torrent Power is one such name, up almost 3%. Yesterday as well, the stock did quite well. Today, up another 3% for Torrent Power. In fact, in the last 1 month, the stock has not done much. So, big gains on this counter. IGL is the next counter we're watching out for, 3.2% higher. CG Power also did well yesterday, continues to do well today as well. Apart from that, Nifty Media is doing well. There's a brokerage that came in from Sun for Sun TV. That stock is also flying high in trade today. But what's actually buzzing around are the sugar stocks. Where if you look at some of the stocks that are moving around in trade, Sri Renuka is up almost 13%. Dhampur Sugar is up almost 12%. Dwarike Sugar, all of these sugar counters are flying high, and that is nothing but our big story of the day. Ria is here to tell us why are these sugar stocks surging. Ria?
Well, yes, Vamakshi, there's been a significant relief for the sugar industry. India has removed all curbs on ethanol production from sugarcane juice and syrup, and as well as B-heavy and C-heavy molasses by sugar mills and distilleries in the sugar season 2025 and 26. And the government is going to periodically review the diversion of sugar for ethanol production to maintain availability of sugar for domestic consumption. Now, these restrictions were earlier imposed in December of 2023 due to the significant rise in sugar prices during that period. And now, after this new move, sugar mills will now be able to use inventory of B-heavy molasses, and this is also going to help in achieving the target of 20% ethanol blending that has been set by the government. And in a separate notification, distilleries have also now been allowed to purchase up to 2.3 million metric tons of rice from FCI for ethanol production, and this will further enhance ethanol production from dual feed distilleries. Now, resultantly, all of these stocks are higher in today's session, but quickly looking at the valuations and the stock performance over the last 1 year for Balram Chini, Triveni Engineering and EID Parry, these currently trade above their 3-year average PEs, and Dalmia Bharat Sugar is just slightly below its 3-year average PE. In terms of stock moves over the last 1 year, most of these stocks are down anywhere between 3 to 45%. Only Shriram, DCM Shriram is up around 9%, and EID Parry has been the outperformer, up by around 37% over the last 1 year.
Well, thank you so much for that, Ria. That explains the moves on all of these chemical counters. But earlier on, we also spoke to Atul Chaturvedi, who is the executive chairman at Sri Renuka. Let's also listen in to what he had to say.
There's no reason why diversion of sugar to ethanol, which current year is about 3.2 million tons, should not go up to anywhere between 4.5 to 5 million tons, and the sugar industry is quite capable of supplying to the government. The only request from the industry is that for far too long, we have been denied a price increase, and there's no reason why from maize they continue to buy at around 72 rupees, closer to that, and from cane juice at around 65. So there's no fear as far as sugar inflation is concerned.
We opened the stock of current season with around 8 million tons. We are hopefully will be closing the season with around 5.2 million tons. Having said that, the next year crops looks very good, and our estimate, the first estimate is around 35 million tons. The domestic prices saw an upward, the corrected movement, and we are seeing a stable prices in an anticipation of much better crop and much better sugar production next year.
Well, moving on then, the GST Council is set to meet on the 3rd and 4th of September to discuss the centre's proposal for a simplified two-slab structure. My colleague Timsy is bringing us all of the details. Timsy, over to you.
Prime Minister Narendra Modi's vision in his Independence Day speech on next generation GST reforms could soon be a reality. The GST Council is set to meet on 3rd and 4th of September to discuss the centre's proposal to shift to a simplified two-slab structure of 5% and 18% with a special 40% rate for sin and demerit goods. If approved, the move will make a wide range of common use items cheaper. Daily necessities such as soap, shampoo, medicines, hair oil, toothpaste, biscuits, namkeen, bhujia, footwear and apparel below 2,500 rupees, along with ghee, butter, pencils and exercise books are expected to fall in the lower category of 5% or even in certain cases exempt. Aspirational goods such as television, refrigerators, washing machines, microwaves, small cars and motorcycles below 350cc, which are currently taxed at 28%, may move down to 18% slab. The proposal also includes a major relief for consumers and industry with life and health insurance premium, as well as reinsurance likely to be exempted from GST. While the centre is confident of a smooth passage, states have raised concerns over possible revenue losses. They have sought assurances of revenue protection, pointing out that they are not opposed to the rate rationalization but need compensation to meet their financial obligations. Also, a mechanism to ensure that the rate cuts are passed on to the end consumer and not result in any windfall gain for any of the companies. The September 3rd and 4th Council meeting is expected to be a crucial one, with the potential to usher in a new phase of GST, simpler, consumer-friendly and aligned with the Prime Minister's reform agenda. Something that we'll have to wait and watch for the Council as to what finally passes through.
Well, thank you so much for that, Timsy. But moving on then, India's scorching 7.8% GDP print raised some issue around the deflator, but NSO sources tell CNBC TV18 worries of a low deflator are overstated. This comes a day after many economists and media reports said that India's higher than expected GDP at 7.8% versus market estimates of 6.8% may have been because of the deflation method. Lata is here with more.
Well, I did reach out to NSO top sources in the National Statistical Organization and in finance ministry, and the NSO sources clearly said that the Indian methodology, the NSO methodology, is comparable to the best in the world, and IMF or international bodies have no problem with the way we calculate. Now, let's first state the worry. Analysts say that the real GDP has come at 7.8%, higher than last year, 6.5%. Nominal GDP has come at 8.8%. Lower than 10.8 last year. So the difference between the two has narrowed to just 0.9%, which is the deflator, which looks very low. The analysts and media worry is that the NSO calculates all goods and services at current prices and deflates it with the WPI, which is very low because it is negative in the last 3 months. NSO says that is not their methodology. For a large number of products, more than half the products, they actually look at the volume growth. They're not going with prices, how much agriculture, the value add was last year, how much crops produced this year, metals, mining, electricity, how many watts of electricity is produced. So it is in constant prices only. And then having calculated the extra production, they add the WPI of the relevant product, as the case may be. So for agriculture, mining, electricity, construction, transport, communication, all these are measured in volume, in constant prices. But there is a segment where you don't have volume and where you measure it in current prices from the BSE, NSE corporates that announce results. Those are private mining companies, manufacturing companies, trade, retail trade, real estate companies, finance companies, that is RBI data on deposits and credit loans, public administration, government's revenue numbers, and other services like health and education. These are measured from companies where you only get the current prices and then you deflate them with the appropriate WPI or CPI, as the case may be. So over there can be a feeling that on years when the WPI is very low and negative, maybe the deflator is too low and therefore it is overstating the real GDP. But that is only for maybe 45% of the total products. The NSO also said that there is no wholesale price for health and education, so they have to do it. They have to take the general WPI. There's no other option. They point out that there are some countries which use the PPI. Now, PPI is Producer Price Index. It's a little better than WPI because in WPI you take, say, the LME price of steel. But PPI would be when that steel comes to the producer and the cost. So there some logistics, transport, etc. are included. Services are included. So those are a little cleaner. But even what the NSO source told me was that even in foreign countries, it's not as if all products they do in this fashion. The other charge is double deflation. In many foreign countries, they deflate the input price and output price separately and get the value add. In India, the NSO only deflates the output price. So that may lead to some overstatement in manufacturing. Again, the NSO says that this double deflation is not indulged in all products abroad. They do it for some products and they extrapolate it. How is the NSO going to address this? February 2026, the new GDP series is coming. Most of this PPI, double deflation, all are going to get addressed in the new one. Also, the current CPI, which is used, has very little services because this was designed in 2012. At that time, a typical Indian family had more money spent on food. But now, 13, 14 years later, the family consumes more services. So the new CPI, instead of the 199 service items in the last CPI basket, will now have 400 items. So services will be better represented. We are in for, therefore, a healthier, more representative methodology.
All right. Thank you so much, Lata, for explaining that to us in such simple terms. But, let's move on and let's also get you an exclusive on the insurance sector. Sources are telling CNBC TV18 that the Bima Sugam initiative and IRDAI proposed marketplace for insurance sales, servicing and claims could now be rolled out without the involvement of the IRDAI. Yash is here with more details. Yash?
Well, what we've been given to understand from our sources is that Department of Financial Services, or DFS, is not, in favor of having any involvement of the regulator, the insurance regulator, that is IRDAI, with respect to the operational responsibilities or taking up roles or having any, operational role as far as the insurance marketplace Bima Sugam is concerned. What we've been given to understand from our sources is that DFS may ask the insurance regulator to pass on all the roles which it has taken with respect to, conceptualization and rollout of Bima Sugam to the industry, that is the insurance industry itself. What also our sources tell us is that the launch of Bima Sugam itself could be delayed by another 12 to 18 months. This should have happened by now, but the launch of the insurance marketplace Bima Sugam could itself be delayed by about 12 to 18 months. What we've been given to understand is that straight away this delay which could come about as far as the launch of Bima Sugam is concerned could be a positive for Policy Bazaar, that is PB Fintech, because this was expected to be a competitor as far as PB Fintech and Policy Bazaar is concerned, but the launch could be delayed by about 12 to 18 months. Now, the reasons for the delay are coming out very evidently as we speak to our industry sources. Not being a priority for the industry, being on the back burner, no clarity that the industry industry has with respect to investments, form and shape of Bima Sugam. And finally, as far as the road ahead is concerned, the industry still has a lot of questions without any answers to them as of yet.
Well, thank you so much for that, Yash. But, before we slip into a very short break, take a look at some of these chemical counters like SRF as well as PI Industries. Now, just a short while ago, we did see some flashes at the bottom of your screen which indicated that there was a relief for chemical exporters. The export obligation period for QCO products has been extended. QCO products are nothing but quality control orders. The export obligation for these products have been extended from 6 months earlier to 18 months. And this essentially provides support as well as flexibility to exporters that are dealing with chemicals as well as petrochemicals. So, big relief for them. So, SRF, as you can see, has recovered from the day's lowest point. PI Industries also seeing a brief recovery. But moving on then, a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists along with curated studio tours, e-learning sessions and masterclasses and curated lifestyle benefits. Welcome back. You're watching Business Lunch on CNBC TV18. Now let's actually put the spotlight on the world of semiconductors. PM Narendra Modi today inaugurated Semicon India 2025 in New Delhi. Now, speaking at the event, he pitched India as a leading chip manufacturing destination to investors. He said India's Semicon journey began in 2021, adding that at least 10 projects have been cleared so far. Now, these projects have attracted investments worth over $18 billion. Let's listen in to what the PM had to say.
एक बार फिर भारत ने हर उम्मीद, हर अपेक्षा, हर आकलन से भी बेहतर प्रदर्शन किया है। एक तरफ जब दुनिया भर की इकोनॉमीज में चिंताएं हैं, आर्थिक स्वार्थ से पैदा हुई चुनौतियां हैं, उस माहौल में भारत ने 7.8% की ग्रोथ हासिल करके दिखाई है। ग्रोथ की यही दिशा है तो भारत को थर्ड लार्जेस्ट इकोनॉमी बनाने की तरफ तेजी से बढ़ना पक्का हो चुका है। और जो हमारा डिजिटल इंफ्रास्ट्रक्चर है, उसका आधार क्रिटिकल मिनरल्स है। इसलिए भारत आज नेशनल क्रिटिकल मिनरल मिशन पर काम कर रहा है। हम रेयर मिनरल्स की अपनी डिमांड को अपने यहां ही पूरा करने में जुटे हैं।
Well, those were some comments made by PM Modi. But moving on then, Ashmit is also here to take us through some of the key takeaways from the summit. Ashmit, take it away.
Well, we're here at Semicon India 2025. It's a marked development as far as the India Semicon journey is concerned. Bear in mind there are over 33 countries represented here, over 50 large companies, the likes of ASML, Lam Research, Applied Materials. They're all here, present here. They were here for the inaugural session as well, marked by the Prime Minister's speech. There were three key takeaways from that speech that we need to bear in mind. Number one, he began with the punchline saying that if oil is gold, then, well, these chips are digital diamonds. And to that end, he went on to say that it's a $600 billion market for semiconductors across the world. It will soon turn into $1 trillion, and that India is aspiring to be a major chunk of that $1 trillion market. Takeaway number one. The second takeaway, and this is with respect to the government support that is being extended. Bear in mind, Semicon Phase 1 had an outlay of 76,000 crore rupees. Here, today, he gave an indication that going forward, ISM 2.0, the second phase, where there will be extended outlays, is something that is around the corner. Sources tell us it's only a few months away. By the end of December is when we can expect the contours of ISM 2.0, and that is a key aspect that a lot of large players who are visiting Semicon India 2025 will be watching out for, to understand what the government's fiscal support program for the industry looks like going forward. That's takeaway number 2. And takeaway number 3, and this is of course more optics, the first made in India chip under the Semiconductor program, which is made by the CG Power plant in Gujarat, was in fact today released. It was put out, was presented to the Prime Minister. He in fact clarified that this is the first of many to come, that there is a case of growing capacities. Canes will be soon coming out with their own made in India chip from their pilot line. Commercial production is likely to begin soon. So clearly the Prime Minister pitching India as a destination, saying that in a world of uncertainty, in a world of geopolitical tensions, India presents a stable option for investors, for companies, as well as for the larger semicon ecosystem.
Well, thank you so much for that, Ashmit. But take a short break then. More news and updates follow on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC TV18. Well, the markets, on this expiry day, which is the first of, the Nifty's Tuesday expiry, has taken a sharp knock, almost 70 points lower from the day's highest point for the Nifty. And, the Nifty Bank actually was trading rather flat, but it has now taken a turn for the worse, of almost 270 points from the day's highest point. The mid-cap end of the market too was earlier, when we just started the show, was trading with a gain of around almost 0.7%. That too has seen a cool off. The mid-cap index is also off almost over 200 points from the day's highest point. And actually the fall on the Nifty is being led by a couple of stocks. Pull up the chart for Adani Enterprises rather. That stock has also cooled off about 1% or so from the day's highest point. Down. It was actually in the green. It has now taken a turn for the worst, trading with a cut of almost 0.2%. Coal India, Shriram Finance, Adani Ports are just some of the other counters that have also cooled off from the day's high. But with that, that's all we have on this edition of Business Lunch. Don't go anywhere. Midcap Radar will take the action forward.